In this video, we're going to be looking at Google stock, Meta stock, and Nvidia. We're going to look at their fundamentals. We're going to look at what's been happening with each one of these stocks in order to try answer the question, which is a better buy in 2025. First thing that I want to do is look through the fundamentals of the business, and starting with arguably the most important fundamental, which is the PE ratio. You know, back in the day, the price to book value was one of the most, if not the most important ratios. But with the way things have developed, especially for technology companies, book value is not as important. What's more important is earnings. Okay, price to earnings. This is Google stock right here. Alphabet, website is Fiscal AI. Alphabet has a price to earnings of 26.5. As you can see, it's gone up in terms of price to earnings recently to 26.5. But on a sort of 5-year basis, it is lower than what it has sort of been in the past. Okay, next let's take a look at Meta's price to earnings ratio. We'll get rid of Google. Meta has a price to earnings ratio pretty similar to Google. It's at 28. And then lastly, let's look at Nvidia, which I believe will be the most expensive of the lot, and it's 50. So 50, 28, and I think the first one was around 26. Let's all compare them right beside one another. So yeah, 50 is Nvidia, Google is 26.9, and Meta is 28.3. So Meta and Google are around the same, but Nvidia, in terms of price to earnings, is a lot more expensive than the other two. I'll just zoom in a bit in terms of timeline so you can get a better feel. 50 versus 28 versus 26.9. The next ratio we should look at is net income, aka profits. Google, in terms of profit, they're growing pretty steadily still, even though ChatGPT is still around and everyone's saying that, you know, ChatGPT is going to take all of Google's moat. It hasn't happened yet. You know, Google is still printing dollars in terms of their advertising revenue, obviously from ads on Google and through YouTube as well. They get ads. That's their main source of revenue. Yeah, and overall just a nice steady growth for Google. Let's look at Meta next. Meta's kind of doing a similar thing, growing decently. You know, look at 2021, it was 40 billion, not million, in terms of profits, and now it's 71 billion. So Meta, again, another company that's printing money still, and Nvidia is obviously just, you know, you can't even compare it to the other two because it's just grown like crazy. And this is obviously a huge reason why the stock is up so much in terms of price, this huge growth in terms of net income. And the last thing I want to look at is revenues. So Google still, it's got that decent growth in terms of revenue. Meta, again, decent growth in terms of revenue. And Nvidia has just grown like crazy in terms of revenue. Again, this is why Nvidia's stock price is up by so much. If we compare all three, you can see that Google has had a compounded annual growth rate of 18%. Meta has had a compounded annual growth rate of 28%. And Nvidia has had a compounded annual growth rate of 40%. So Nvidia, in terms of growth of revenue, Nvidia is winning that, and that's why it's the most valuable company in the world today. If you just take a quick look at their balance sheet, you can see that this is Nvidia. Nvidia has $57 billion in cash on their balance sheet. So they all, and you'll see that they all hold a lot of cash. 57 billion for Nvidia. Meta is 47 billion in cash, hardly any net debt. And Alphabet is 95 billion in cash and has 50 billion in net debt. So they all keep a healthy amount of cash on them. And this is obvious the reason why Google is kind of known as a value tech company. A lot of the value investors are liking the stock, but the question is it worth the low price? You know, is ChatGPT going to take some of their moats? And then Nvidia's had all of that growth, but the question is that growth sustainable? And are you willing to pay that higher price to earnings for a higher growth company? Or is it better just to pay a lower price, a decently lower price, and buy a company like Google or Meta? So I've got a title called The Core Battlefields of all of these three companies. Alphabet, their core battlefield is search, the search system. You know, people go to get answers with Google. They go and Google things to get answers, to go to websites, and obviously they get paid ads through the search dominance that they have. And YouTube is a similar type thing. Nvidia, Nvidia's got the AI backbone with all of the GPUs, and they've got the best GPU on the system, and It's very hard for any other company to compete with them, and everyone wants Nvidia's GPUs, not really other companies. So that's where they're dominating. And then Meta has just a social media empire: Facebook, Instagram, WhatsApp, and then they're playing off to the side a bit with other big AI bets. We'll talk about that soon. Okay, let's get into the news. What's happening with these three companies? So first news is, I'm not sure if it's big news, but Joseph Carlson has been buying Google. He's very bullish on it, so let's see what he has to say.
Welcome back, everyone. Today on the Joseph Carlson Show, I'm buying $10,000 more of a stock I already own. The company is Google. Now, you may be asking, Joseph, why are you buying a company that's at all-time highs? Why are you buying a company that the stock price just went up 40%? And those are valid questions, and the primary reason behind it has to do a lot with Oracle.
So he's buying, and you've also got other big players who are buying. Bill Ackman came out recently and said he likes Google. So Bill Ackman said, despite tremendous business momentum, Alphabet still trades at a discounted valuation for a business of its quality and growth prospects, partially driven by investors' concerns around any upcoming antitrust ruling. In its core search product, the company's AI leadership is most evident in its broad rollout of AI-powered summary responses called AI Overviews. Google's state-of-the-art video generation model, Veo 3, has been a viral hit with over 70 million videos created since its launch in May. And then you got Google Cloud segment, a $50 billion run rate revenue business, growing at 30% plus rate, is also seeing its AI capabilities accelerate product differentiation. So yeah, Veo 3 is very good, and I think their AI overviews are very helpful and are needed if they want to compete against ChatGPT. So Ackman still likes the stock. Recent news with Nvidia is, of course, China has banned tech companies from buying Nvidia's AI chips. Beijing has stepped up efforts to boost semiconductor independence and compete with the US, and one of the ways they've done this is by banning their competition. So that's classic China. And news with Meta is they've just launched their smart glasses with built-in display, reaching for super intelligence. I watched their conference, and there was a bunch of hiccups in it and things that didn't work with their display, and it was very clunky. So that's not a great sign, but I guess the overall idea is very interesting. You wear glasses, the glasses they got AI built in, they got a reading system there, they can record video with the glasses, they can do a lot of cool things. I'm not 100% bought on, whether it's gonna work ubiquitously for everyone and everyone wants to just put on these AI powered glasses and just be stuck in this artificial world. I'm not buying it yet. So a bit of a summary of who wins in 2025 and beyond. Short term, Nvidia's leading growth because of AI demand. I could definitely see Nvidia just keep doing what they have done these past couple of years and keep going up. That's a possibility. It's not a guarantee, but it's a stock that you're paying such a high price for. It's too risky for me. It's not my style paying such a high price. I'm more value. Midterm, you could see Google doing quite well. Steady cash machine. They're still generating a lot of cash, even though ChatGPT's been around for a while. It hasn't eaten into how much profit they're generating. And long term, Meta could surprise if their AI VR gamble pays off, but I'm not convinced on that. But either way, they're going to keep printing money with their social media and with their ads. So that's a bit of a summary of what could happen with all three of those stocks. Out of the three, I'm probably more in the range of Google or Meta. And Nvidia, not so much. It's too expensive for me right now. I've recently started a school which you can join, and you can see the stocks that I'm buying, the stocks I'm watching, and you can get a bit of a guide on how to invest for beginners. So click the link to that in the description if you want to join.